What's going on, everybody? This is your boy the GOAT Andy Zar, and welcome back to my YouTube channel, guys. If you're new to this channel, please don't forget to hit the like button and please subscribe. Guys, today we're not gonna be talking a lot more about a lot that's happening. We're just gonna get straight to the video of how I made 2.2% trading with Equity Edge on my funded challenge. So basically, guys, what really happened with the market, as you can see, I have a free Telegram group. So before everything actually started, and guys, Equity Edge has a special running right now, which is you get a 100k with only $300, and you get a 50k with only $200. So that is when I started, and then I had actually bought myself 100k challenge with $200. I'll pop you out in the screen, as you can see right here. Well, hello fellas, just a quick one. If you would like to get funded literally by a prop firm that's still regulated with meta codes, the prop firm that was never burned, that never has problems with regarding all these prop firms issues that every prop firm out there is experiencing, try Equity Edge. Equity Edge is one of the prop firms that I'm currently in challenges with. Basically, as you can see, you can be unlock up to 100k on Equity Edge account. This is just for now. Obviously, it's not so long ago that they've been launching, but they've actually came up with a good community towards the prop trading space. And guys, I'm literally looking forward to actually passing with them. And as you can see, Equity Edge, you can scale up to 2 million and receive up to 90% profit split. It caters for 100 plus countries, and average payouts processing time is actually 8 hours. Equity Edge offers two models of funding. For one, we have a one-step funding, of which, guys, currently the prices are on discount. If you are that one person that just likes one stage and move forward, you can consider yourself on getting a 10k for $30, 25k for $134, 50k for $200, and 100k for only $300. And for some people like me who love two-step funding, you could literally see that you can get a 10k $30, 25k $135, 50k $200, and 100k for only $300. The difference will be that you only have daily drawdown of 5% on a two-step, and you have a max drawdown percent of 10% on a two-step, but only on a one-step you have a daily drawdown of 4% and maximum 6% loss, which is actually a trailing one. So choose your accounts best. Personally, I would ask you guys to choose a two-step because it has efficient number of drawdowns, it has lower as well, it has lower profit targets, and it's easier to manage because it has a high leverage also. So 0 minimum trading days, and the trading period is unlimited. Make sure while these are on special, guys, you can be funded with the 100k for $300 and 50k for $200. The link will be on my description. Please use it and make sure that we get funded. Let's get. And then, guys, we took our first trade. Obviously it was proper. As you can see, this was the first setup I took, and now everything, guys, I ever share, I share on my Telegram group. That's why I always motivate you guys to go to my Telegram. And then, as you can see, that was the before, and then this was the after. But unfortunately, the after only hit at a very later stage because the market had broken out of this structure. Let's just go to Euro USD, which is right now. Don't mind my chart changing, guys. There's a little bit of merging I'm doing. You guys will understand when I drop the video very soon of how I merged price action and smart money. So as you can see, this was the price right here, and then I was looking forward for the market to sell because we had actually reached our fair value that we had left right here. So I could have protected profit as soon as the market dropped a little bit, but I became a little bit greedy. I didn't protect any profit, so the market pushed it impulsively to the upside and started going extremely down. So unfortunately, I became part of the liquidity, which is, I mean, it's okay. So I then took a loss from this thing, and as you can see, this was the result. I'm very transparent. This was my Instagram. Also follow me on Instagram. As you can see, this was the trade I took. You could see, guys, we were literally floating $2,200 on when the market went on our direction, and when we hit stop loss, we lost 2.5%. Of which it was really much of a rabbit hole, I don't want to lie, but it is what it is at the end of the day. And then furthermore, we went to dig deeper to how I made this amount that I 2.2% on my challenge with equity edge. As you can see, this is what really happened, guys. As you can see, this was the scenario. So basically the market was trending in a bullish market. That's the first thing I saw. At the end, we already broken off the daily zone. This is a daily zone. We already broken below it, and we are starting to consolidate inside it. So also in the consolidation, there was a bullish market that was being built. So with me, it was okay. So we have respected this trend. We impulsed to the upside, and then we broke the structure. As soon as we broke the structure, the market impulsed. That's when I knew that because of this low that was on the trend, and also the recent zone on the trend line resistance, these were my two places I need to check where is the premium and whether is the discount. And then I figured out that my entry urge has to be somewhere right about here, mainly because the market only impulsed to the upside without coming to respect prices over here, which with some people is known as the fair value gap. So it had respected I knew it had to respect the fair value gap, and then that is why I did it. So if you can, let's go to the explanation of this trade on my Telegram. You could see I was like, this is what I mean about me refining journey to evolve my price action strategy and combine it with smart money. Pay attention. I said price action, we need structures, trends to identify the market, reason we use trends and zones and also patterns. And then I said in this scenario, which is the GJ scenario, in this scenario, we are trending below the daily zone, but moreover, we are in consolidation channel, which inside the channel, there is a bullish market. So within that bullish market, I can only be looking for buys, not to sell. So that is what actually made me to start selling, to start buying or having my buy limits up to order. And then I said, with smart money explanation, with smart money, we need to understand that what liquidizes the market, which means we need to know what drives the market and how towards the buyers we came in conclusion of when it comes to price action. So with price action, as you remember, guys, we had said we are trending below the daily zone and we are in consolidation. And then we have just recently discovered the bullish pattern or the bullish trend that's happening within this. So within that bullish trend, how do we use smart money to establish the liquidity to push prices either going up or either going down inside the bullish channel? That is what I said. And then I said in this scenario, on this first leg movement, we had the liquidity purge or trap, which led to a change of price or rather a reversal. So what I meant was, if you look right here, we had what I say is an LGS. So an LGS is liquidity sweep. We had actually sweep prices right here, and then the market pushed to the upside. The market pushing to the upside, it started building this trend that was happening within here. And then I said this was in confirming that we had a break of structure, which confirmed there is a high buying power coming in the market. This means after the break, we had to wait for the retest or retracement in order to get involved in the trade, and that's what literally happened. So basically the market built this structure. As you can see, we swept the liquidity right there, we impulsed to the upside, and then we dropped again, and then the market just built this whole structure. So I knew from here to here that could be our supporting trend, from here to there that could be our resisting trend. And then as soon as the market failed to come here, I knew this was an area of sensitivity, because if you look left from this price right here, you would realize this is more of a zone. And as soon as the market broke this, I knew there was high buying power coming in. So that's why I said here break of structure, because this was a level where high buying power was coming in. As soon as that happened, I knew this was the low that actually created that high. So I had to take my Fibonacci retracement to there, and then understand also with the gen box that the discount price and the premium price, where are they, in order for me to actually get my entry. And that's literally what happened. So now let's dive into the chart so that you guys see it as well. And as you can see, this was when the market was starting to move on my Telegram. I was showing them everything. As you can see right here, this was the first profit we made. And then as you can see, this was the GJ I also spoke about. We actually entered the trade first leg right here on the retracement, and then the market pushed, we scaled in, and then I think I closed manually somewhere right about here, as you can see. And then guys, let's go to the chart right now. Here is GJ. So now with GJ, guys, the bigger part about GJ is that what literally happened, let's just take price back to somewhere right about here before we were actually triggered on this trade. Let's take price somewhere right about there. So I'm just gonna zoom in. So as you could see, actually let me take it back until let me take it back actually until here. Right, so before anything happened, guys, what literally happened is I said here we saw liquidity being purged, or to say being swept, being taken out. There's a lot of terms on this thing. So as the liquidity was taken out from here, we see it because the market spiked and tried to break this level, but it never did. Remember, we are now on a 30 minutes time frame. Furthermore, I dropped the time frames. You realize that this was just the spike in it, and then actually the market was to change direction. So let's go back to an hourly time frame. So as you can see on an hourly time frame, this then continued to form a double bottom. This is price action now, right? That's why I said, guys, I'm gonna explain how I actually am merging price action with smart money. So the market from the double bottom impulse to the upside. At the end of the day, we can't just enter a trade without any retest or any consolidation. The market needs to prepare in order for us to enter. You can't just enter when the market is already driving. It's more like jumping on a car when the car is already driven. There's chances that you won't even survive. So that's what happened. The market impulse to the upside. So from then I knew, okay, as the market turned right here, I took my trend from here and I put it somewhere about here. I knew these two dots combined together, and also these two dots combined together. So we have a lot of playground to play around right here, of which obviously at the moment I didn't see the bias. And the market impulsed to the upside as well, and corrected to the upside and it corrected to the downside. I knew that the market turning right here, this was an area of sensitivity. So the only way to know that the market will continue going further up is as if we break that structure and actually impulse to the upside, in order for us to be able to get that impulse to the upside, for us to be able to get that retest and go straight up again, right? Bear in mind, this is price action now. This is now price action. All right, cool. So if we play this furthermore, you could see what happened. So we would justify this as a liquidity. The people were trapped here. So basically, as people were trapped, this was people just being swept out of the market because they knew there's probably buy orders that are happening right here. And then let's play prices furthermore. As you can see, furthermore, as I play prices, there was just basically this was in 1 hour. So there was spikes happening here, and then the market managed to actually close above this. And then as we move forward, you can see now we have broken the structure because we had to collect a lot of buying orders, sell orders, and then the market pushed to the upside. So now this, instead of being a liquidity sweep on a 30-minute, it now turned into being a break of structure, because as you can see right here, this was now a break of structure. We've broken that structure. So now from then, I knew that, okay, Andy, so basically, now that I have the low, that created the break of structure, I am in need of a high. So that is why patience is really important. As you can see, as the market plays along, that was too quick. As the market plays along, let me put it back right here. As the market plays along, this was now here. And in order for us to see market changing like that, you could see the market started reversing. We need to have at least 2-3 candlesticks that show that the market is reversing for us to be able to consider that as a high. So from now, I know that this low is the one that created me that high. So this is where liquidity will be relying on, and this is where I could actually get my buying entry. So from then, I took my Gen box. My Gen box is the one I use to calculate where premium prices are and where discount prices are. So in this instance, since we are on a buying momentum, the discount price is below the 50% and the premium price is above the 50%. So since we are buying, we took it from here, we put it right there. These are our discount prices. This means any price we get from here to buy the market, we're going to actually get it more cheaper because the prices broke beyond the premium prices. This means these are less risk trades. But then if we take prices, if we buy anywhere above the 50%, it's a high risk trade because it's still on premium. Does it make sense? So you're still on premium, so it's a high risky trade. So in this instance, personally, I like discounted prices. This means I love low risk trades. That is the main reason. This is, guys, bear in mind, this is now smart money speaking. So in that sense, I take my gen box after I calculated it, and then from there I take my my Fibonacci tool from the lowest swing, from the swing low, and take it to the swing high. And then from that level moment, this is where I'm able to pick up my 71, 75 or 79th level. These are the three levels where I normally set my orders, pertaining how confident I am with the setup. Normally it's a 75, but I recently noticed a lot more that as I'm practicing this merging of price action and as I'm practicing this smart money and price action combination, a lot of my trades get triggered around 75 and 79. So that is the main reason I have it on max as 79. So as you can see, now this was when the price started moving. The price started moving, drop, and then we were triggered in. The crazy part about this, guys, is you just get triggered in and then the market starts moving. You get triggered in and then the market starts moving. Trust me, the whole trickling of momentum gets annoying at some point, because there was a point where the market came back. As you can see, I had to be patient with that. I had to be patient until the market pushed to the upside, and then boom, the trade was done. And that is literally how, guys, I made 2% from GJ. So I'm actually sharing my journey on my Telegram and also, guys, on my Instagram. So if you follow me, you're gonna notice how I actually tweaked these old things and merged them together. And as you can see, as I showed you guys, here's the proof. GJ, I entered the first trade, I scaled in somewhere right about here, and I closed some profit, as you can see right now on the screen. So that's literally what happened. You already know what's going on, guys. This is your boy the GOAT and Lazar Pro Gang.